We're going to go ahead and kick things off here. Welcome, everybody. I'm Jake Alexander from Action Accounting here with my friend Nicholas Bowe today. We appreciate you taking some time out of your day to spend it with us as usual. It's 2026, which is crazy to even say. 2025 went by faster than any year that I can remember. And it's kind of interesting, when you're younger, people tell you, hey, the older you get, the faster those years fly by. And I'm actually getting to the point where that totally makes sense and I can absolutely feel it happening. So, anyways, 2026 is here. We want to make sure you got a really good kickoff to the year. You're planning, you know what to expect. So that's what our event is here today. We call it the 90-day reset. Really appreciate you taking some time out of your day to spend it with us. Me and Nicholas are going to cover quite a bit of information, but we want to make sure you're set up for success. You know what to expect, and you have all the resources that you need moving forward. So we'll jump right into it. On true accountant fashion, we've got to be organized. We've got to have an agenda, right? You got to let everyone know what to expect. And so, real big on setting expectations. We always start with an introduction. So, a little bit about our hosts, a little bit about me and Nicholas. If you're here listening to this, you probably already know who I am. But just so Nicholas and I aren't some perfect strangers up here talking to you, I want to make sure we introduce ourselves properly. Cover a little bit of housekeeping too. I always like to make sure everyone knows kind of how to interact throughout the course of the event. We do want to hear from you. We want to answer your questions, and we want to make sure everyone gets as much value as possible. So, quick introductions, go into a little bit of housekeeping. From there, we're going to get into the meat of it. So, it's 2026. I don't know if you can believe that. I honestly can't. What we're going to do today is talk about a little bit of the past, a little bit of the present, a little bit of the future. And so our main section here is we're going to talk about a little bit of the past. We don't want to spend too much time doing that ever, but in 2025, there was this thing called the One Big Beautiful Bill Act that made some major updates to the tax code. So I want to spend just a few minutes breaking that down and explaining what that means for business owners, for individuals, and basically for everybody as a whole. For the present, we're going to talk about 2026 tax season. We're here already. I can't believe it, but it's January 2026. We call this is like Super Bowl time for us here in the accounting and tax world. So that is here. We're going to talk about all the things that you can expect from our team, all the things you can start putting together to get yourself organized and make sure you have everything ready to go to file those 2025 taxes in 2026 tax season. And then a little bit of the future. We're going to talk to Nicholas here too. So a majority of the people, the clients that we serve do own small businesses. Some of them don't, and that's okay. But majority of them do own small businesses that they want to sell one day. And so I invited Nicholas here. He's a business broker with Iconic. We're going to have kind of an interesting Q&A session going back and forth, and we're going to also open that up here too. So if anyone has any questions about potentially selling your business one day, that's why Nicholas is here. He's an expert in that area. And we're going to cover that. And so from there, we always go into a recap. We leave plenty of time at the end for Q&A. We do want to make sure you ask your questions. When I say that, I also want to say too, you don't have to wait to the end to ask your questions. If they come up during the conversation, post them in that Q&A box, which is down there. Just real quick on the housekeeping, I like to let people know this is a little bit different version of Zoom than you're probably used to. We tried these a couple of times on the regular version of Zoom, but when you have 20 or 30 people on a Zoom call and people can just unmute and turn their video on and ask questions, it can quickly go off the rails. So in respect of everybody's time, we host these in the webinar version. What that means to interact with us, you got to use the Q&A box. If you try to use the chat box, it will probably tell you it's disabled. Doesn't mean we don't want to hear from you or interact with you. It just means you got to use the Q&A box. So on that little menu on the bottom there's probably 3 dots over towards the right. If you click that and then go to Q&A, you can bring those up and you can type your questions in there. If you want, just for a quick technology check, because the last thing I want is to get all the way through this and realize people couldn't use it. If you could, just type in there like your first name and the city that you're from, just so I know it's actually working and everybody can use it. That would be great. So use that Q&A box, type your questions in. We'll have plenty of time towards the end, but if stuff comes up now or during the conversation, we'd be happy to answer those as we go to Charbel from Los Angeles. Good to see you, Charbel. Happy New Year. Coming to us from sunny Los Angeles. That's great. Everyone else too, just type in your first name, the city you're joining us from, so we kind of know everyone has access to it. We know it's working, and you know how to use it, most importantly. So, all right, with that being said, we'll jump right into it. So, introduction, like I said, if you're here joining us, you probably know who I am, but just to make sure, I'm Jake Alexander with Action Accounting. This will be our 11th year in business. We have a team of 10 team members now. In our company, we have 4 main departments. So we have a bookkeeping department, Pam from Largo. Hey, Pam, thanks for joining us. right down the street in sunny Florida, which is awesome. But here in Action Accounting, we have four main departments. We have a bookkeeping department, which they help create financial statements for business owners. Here, we're really helping business owners understand how much income is coming into their business, how much they're spending on expenses. More importantly, we're teaching them to read those financial statements like the P&L and the balance sheet so they can understand their cash flow, make informed business decisions. And so that's our bookkeeping department. Then we have a tax prep department, which this time of year gets really popular and gets really lively. There, we're helping everyone prepare and file their tax returns for the previous year to make sure everything is fine, timely, and compliant. We also have a tax planning department, which is what I like to say where the real magic happens. That's where we start proactively working with our clients to put proactive, aggressive strategies in place to save them as much money as possible. And then last but certainly not least, we have a business consulting department as well. So there, if you have a growing business, we can help you put systems and processes in place to hopefully need the services of somebody like Nicholas one day and sell that business so you can move on there too. So you can always reach us on our website or any of the social media channels. That's just a little bit about me. From there, I want to introduce Nicholas Bowe, who's got years of experience in across all kinds of industries like food and beverage industry, e-commerce, wind energy, HVAC construction. He actually owned a small business at one point, so he brings a unique and practical perspective to the process. He's been in your shoes, building, growing, and even exiting his own business. So he understands the emotional and financial complexities that come with selling it. So now he's a business broker with Iconic. You guys' mission there is pretty simple. It's to help business owners sell for the maximum value with the minimum stress and in a confidential way. So Nicholas, how you doing today?
Good, good. Thank you. Appreciate you having me on, and everybody, thanks for joining. Like Jake said, my name's Nick. I'm with Iconic, M&A advisor and business broker. We really just want to streamline the process for business owners that are looking to exit. We want to try and get them to discuss things early as possible. So if it's on your radar, I think a great idea is to touch base with a broker or tax consultant or someone like that, maybe 12 to 24 months prior to you actually wanting to list the business and start the whole process. Um, Avoiding some big mistakes and pitfalls up front and getting some things in order will really help streamline and make the selling process efficient and much faster.
Yeah, I love it. Thanks for joining us, Nick. We're gonna go, like I said, a whole Q&A session. I got a bunch of questions for you. If anybody else does, pop them in the Q&A, and we can answer those kind of as we go, or we'll have time at the end too. So that's
Yeah.
who's talking to you today is me and Nick. We'll jump into the bulk of what I wanted to cover here, and it's this past, present, future. So in the past, what happened, right? Like, how did we get here? So back in 2017, there was a thing called the Tax Cuts and Jobs Act that was made a lot of changes to the tax code. It lowered tax brackets, it changed the depreciation amounts, it changed the corporate tax from like 35% down to 21. So it's considered major tax reform. So when this happened back in 2017, this was the largest change to the tax code that happened since 1986. When that happened, why it's important is most of those provisions were actually set to expire in 2025. So if we fast forward to 2025, but rewind from where we are now, this was called the One Big Beautiful Bill Act. So this passed around the middle of 2025, and it revised or replaced a lot of the elements from the Tax Cuts and Jobs Act. Once again, this was considered sweeping tax reform. This was like the biggest changes to the tax code in decades. And so who does it impact? It impacts everybody, which normally isn't the case, but with a lot of the changes and things that came to be from the One Big Beautiful Bill Act, it affected everybody: retirees, families, employees, most importantly, business owners, or mostly impacting business owners. One of the things I found very interesting about this One Big Beautiful Bill Act is it expanded the IRS funding, specifically in the auditing sector. So they earmarked $80 billion with a B to modernization tools for the IRS, specifically around artificial intelligence auditing, and specifically to focus on high income earners, which the IRS defines those as people earning $1 million plus per year, and small business owners. So if you are a small business owner, if you are a high income earner, what does that mean? You have more likelihood to get audited. That's not necessarily something that should scare you or freak you out. It just means we do need to be organized. We need to make sure that everything we're doing is within the Internal Revenue Code. And most importantly, we have all of the documentation to substantiate it if we need it. And so Some of the changes that happened in 2025, bonus depreciation came back. So there's a section of the Internal Revenue Code called 179, which if you have a vehicle that you use for your business and you use it for more than 50% of the time for business, and it weighs over 6,000 pounds, you could potentially take a deduction for up to 100% of the total cost of that vehicle, whether or not you paid cash for it or not, doesn't make a difference. So you could be financing a vehicle and take a large deduction for it in 2025. Research and development expensing came back. So this was a major one right here. This is specifically, I don't want to say tailored, but applies more so to like software companies, artificial intelligence for sure. Anyone who's doing research and development activities. So this is for creating new systems and processes in your business, for creating new products and services that don't exist. Expenses spent on those activities went back to 100% that you could take the deduction for, which is huge. There's a thing called QBI, which stands for Qualified Business Income. They changed the phase out from 400,000 to 500,000, which was a big deal. And they preserved a lot of the incentives for retirement plans. So we see it all the time. We have business owners switch over to us and they're not, for whatever reason, totally aware of how much money they could be putting in these retirement accounts to preserve themselves for retirement, but then use it as a tax deferred vehicle in the current year. So there's a bunch of different ones out there. There's a solo 401k, which is really cool for spouses who work in their business together. They can potentially both contribute to these accounts. So they could put like over 6 figures per year into these retirement accounts. That's money that's now a deduction from the business and it's growing in a tax-free account for you. There's other ones called like a SEP and a simple. The SEP stands for Simplified Employee Pension. That way you can put close to $70,000 per year into these accounts. It's money that you're not paying taxes on and now growing for retirement. Or there's a simple or even a traditional IRA, Roth IRA. The biggest thing is understand what kind of retirement plan you have, and let's make sure we're using that for tax planning purposes. And so that's a little bit on the business side. On the individual side, it changed it where people don't have to pay tax on tips. So if you work in a restaurant or you own a restaurant, this is a big one. Definitely something that would come up as a question. It does max out at $25,000 and starts to phase out when you earn a little bit more income, but that was one of the bigger changes of the One Big Beautiful Bill Act. Also, no tax on overtime. This is another big one right here. So maxes out at $12,500 for the year. Does start to phase out when you earn a little more income, but these are just great tax cuts that they put in there and were solidified by this One Big Beautiful Bill Act too. And so as we're going along, if anyone's gotten questions, make sure you put those down in the Q&A. We'll make sure we answer those as we go. Another one on here too is that personal car loan interest. So this was a pretty cool update to it. So previously, if you own a business, a lot of people were aware that you could take business vehicle expenses as a business deduction, but there wasn't anything for your personal. Now there is. So for your personal car, if you have a loan on there, you can actually write off up to $10,000 in interest that you pay on it. So they also changed, it's called the SALT deduction, which is the state and local taxes. This is for the real estate taxes you pay on your primary residence. They used to give you a deduction for it, but it was capped at $10,000 per year. They raised that to $40,000. They changed the child tax credit, raised those to $2,200 for children. So for people who have 3, 4, 5 dependents, that can quickly add up. They did get rid of the EV credits, which was the electric vehicle. So you used to be able to buy a Tesla or whatever electric vehicle and get credits for that. They got rid of that, as well as the credits for solar improvements to the houses. And so that's a little bit about the past. I don't want to spend too much time talking on there, but the message there is there's a lot of changes that happened in 2025 with this whole new act being passed. And so starting now and being prepared and being proactive about this stuff is how you're going to maximize it as best as possible. How am I doing over there, Nick? I'm not putting everyone to sleep, am I?
Good. Yep.
Perfect. So a little bit about the present. Here now we are in the peak of 2026 tax season. So what we like to talk about is let's get you onboarded now. Let's get in the system. If you're an existing client, you already know how this works. If you're a new client, we do need to get you onboarded, but now's the best time to start that. We got our support team that'll walk you through the process. It's really just getting you set up with your client portal, but what's most important is that we have a good understanding of all the dynamics that go into taking care of your tax return for you. And so the best thing you could do is get organized now. The way you do that is just understanding all these documents that are going to be flooding your mailbox or your email inbox at work because everything's going to be coming in here probably before the end of this month is when that's all supposed to happen. So if you're an employee, you're going to be getting W-2s. If you're a contractor, you're going to be looking for 1099s. If you own a business, we need to understand the income and expenses. We do that from having a good P&L and a balance sheet. If you have investment income, those will come through from 1099s from your financial planner, whoever handles your investments. If you have rental properties, we need to understand the income and the expenses there too. So pretty much like a P&L for the rental property, how much do we bring in for rental income? How much do we spend on expenses? If you have a property management group that takes care of that for you, they'll probably send you a 1099, and they're usually pretty good about handling all those expenses too. Mortgage interest and real estate taxes, those come on a 1098 form. So that'll show you how much we could potentially take as an itemized deduction there too. So all kinds of forms are going to be coming. You're going to be getting flooded with information. Just put all that stuff in a folder. Once we get you into the client portal, you can upload those in there too. And so major life changes I like to talk about too for whatever reason. Not sure why, but we always every year get one or two clients where we're almost ready to hit submit on that tax return and say, wait a minute, I forgot to tell you I got married last year. Or wait a minute, I forgot to tell you I had another kid last year. It's like, oh, well, those are major life changes that we want to be aware of. We want to make sure we get everything documented properly. We want to make sure we get everything going. So letting us know about that stuff proactively, not reactively, is the name of the game right there. So that's a little bit about the individual side. On the business side, you gotta have clean books and records, right? If you're using QBO, which is QuickBooks Online, is the best way to do it in our opinion. If not, at a bare minimum, we got to be using some sort of spreadsheets. We want to make sure everything's categorized and reconciled. So for whatever reason, business owners who handle their own books are usually pretty good about making sure everything's categorized. For whatever reason, they tend to not understand that you got to go and reconcile everything. And reconcile is really just a fancy word for double check. We want to double check that everything that's in QuickBooks Online matches what's in the bank account. And so if we do your books for you, we'd love to schedule some time proactively with your bookkeeper so you guys can go through and make sure all that stuff adds up 100%. Make sure you agree on everything. If you handle it yourself or you have your own in-house bookkeeper, I would recommend doing the same thing. Just sitting down with that person, make sure everything's categorized correctly, and make sure everything's reconciled, which once again is a fancy word for double check. If you're a business owner and you had any out-of-pocket expenses, this is stuff that you maybe spent money on a credit card or you paid cash at a restaurant. It's not the preferred way to do it. Don't get me wrong here, right? But it's not necessarily wrong or there's nothing bad about doing it as long as we categorize it correctly and we put them in the books and we have good documentation for it too. So if that did happen, we want to make sure we get all that stuff together so you don't miss out on those deductions. If you had a home office, this is another one that a lot of times doesn't get run through the books throughout the course of the year. There's some other documents that we would have to get and then do a little journal entry in there too. Once again, retirement plans, depending on the kind of retirement plan you have, if it's a solo 401k or SEP or simple, some of those actually run through as business expenses from the business P&L. Others are going to be on the personal side. So really just wrapping your brain around what is all the things that we need to do, what are the things we need to get organized, and let's start doing it as proactively as possible here. And so start now, don't wait until the last minute. I always tell clients too, let's understand that net profit number and what that actually means for you. From a tax planning perspective, having your business show the least amount of profit can mean the great thing of not really owing any money on taxes. It can also mean if you show that to a potential business broker like Nick who wants to sell the business, or a banker who's going to approve you for buying something, or you're looking to get approved to buy a house or a car, and your business only shows, say, $30,000 net profit for the year, that's not going to really help you for credit approval purposes. So if that's something where you're looking at any sort of major purchases or major life changes around the business coming up, you want to make sure you really understand that net profit number before we get too far along in the process. And then also documents for major purchases. So if you purchase a vehicle for business, assets, office furniture, upgrades, improvements, any of that sort of stuff, you want to get all that stuff together so we can start being as organized as possible, know what to expect, and get everything moving in the right direction. And so last thing here, and I'm going to finish up and turn it over to Nick, is are you an extension filer or an early filer? A lot of people don't realize we get this every year. So we just like to make sure we cover this and make it very clear. There's two main deadlines in the beginning of the year. There's March 15th and April 15th. March 15th is for businesses. If you're taxed as an S corp or a partnership, with a lot of which a lot of our business clients are, those business tax returns are due March 15th. The individual tax return deadline is April 15th. Now you can always do an extension and extend those time frames to September 15th and October 15th. When you do that, it's an extension of time to file the tax return, not necessarily an extension of time to pay the taxes due. So every year we get clients who put in an extension, wait till October 15th to pay those taxes. Then they get this little extra bill from the IRS afterwards, and they always have questions why. And that's the reason. So even though if we do put in an extension, we want to do our best to pay as close to an estimated payment of taxes for the year by April 15th as possible. And so it's all about communication. That's why we're here. That's why we do events like this. We want to be out in front of you and as accessible as possible. So just let us know. If you're an existing client, be on the lookout for those commitment emails. Those should have started going out in late December, if not here early January. You can always reach out to us at our email address, which is support@actionaccountingusa.com. You can always call the main office number 2, or you can always join one of these events and ask questions live as well. So that's a majority of what I had to cover with you. I want to switch gears a little bit. We talked about the past, kind of what happened with the changes in 2025 with the One Big Beautiful Bill Act. Present, now here we're in the heart of tax season, all the stuff we need to start getting together and what to look for. Let's talk a little bit about the future, which is where somebody like Nick comes in, a business broker. A lot of our clients are business owners. And if you're anything like me, business owner, the dream is to sell that business and retire and walk off into the sunset one day from all of your hard work and efforts. We're going to need somebody like Nick. And so that's why I invited him here today to do a little bit of a Q&A session. And so if anybody out there has specific questions, go ahead and ask those. If not, I've got a handful and I could probably ping you with questions from now to the end of this too. So Nick, how you doing over there?
Good, good. Yeah, let's get into it.
All right, let's do it. So if you're out there and you have questions, pop them in the Q&A. We can ask those. If not, I'm going to ask a couple just to kind of get us going here.
Yes.
So and this is something I don't want to say we see it all the time, but pretty often, business owner, all of a sudden they want to sell their business. They're excited or something happened, major life change or whatever. Like, how soon should they expect to actually have a check in their hand? Is that like a month from now, or what does that look like?
Great question. Yeah. It varies, right? So I'll say that when you have your business listed, you've had some conversations, you have interested parties, they make an offer. Let's say you're all the way through due diligence. That typically takes, on a national average, to sell a business, it takes about 10 to 12 months. It can be done significantly faster than that. It can also take 2 to 3 years, heavily dependent on what industry you're in, size of the business, how complex a transaction is going to be. But typically, I would say between 6 and 9 months is kind of the time frame that you can gauge on listing your business to getting your check, at closing for selling the business.
So this isn't an instant thing. If I all of a sudden am having a month where
Yeah.
I'm pulling my hair out and I decide to sell, I'm probably not walking away in 1 to 3 months.
Exactly. Yeah, you can bank on about 6 months at the quickest in a typical situation. Now, if it's a smaller business and it's an all cash deal, I've seen deals happen as quick as 30 days.
Really?
Yeah, the due diligence is not complex, minimal questions, finances are clean, and it's just a cash transaction. That can happen very quickly. And then I've also seen certain companies that have been listed for 2 plus years and that, it has some interest, but due to the sale price and the industry, what the seller wants usually is, a deciding factor in how long that takes. So there's all kinds of things, but yeah, I would say 6 months is a good average.
That's great. And would it be safe to say if we did say there's some crazy situation or whatever, if you did need to have a fire sale, for lack of a better term, and we had to sell for or within that 1 and 3 months, the check you're going to get is probably lower than if we would have waited
Right.
and kind of gone through the
Yeah.
full process.
Yeah,
That makes sense.
exactly. I would say the more aggressive your pricing is, the quicker you could probably sell the business. And if truly maximizing the dollar amount is your number one priority, it could likely take a little bit longer. Now, if you have a great business, very profitable management team, you're not involved in the day-to-day, you're going to get a great offer, and that can also go pretty quickly.
Awesome. And how do you know what the business is actually worth before you go through all this, this process?
Great. Yeah, great question. That is, so most businesses are valued off the multiple of net revenue. What we use for small Main Street style businesses, usually under, 3 to 5 million, is something called seller's discretionary earnings. We'll take a look at the tax returns. We'll add back some deductions, any personal expense. A lot of the time, automobiles or cell phones. We can add back one. If there's more than one owner, we can add back one owner's salary. What we're trying to do, you mentioned this earlier, with a good accountant and a good bookkeeper, what you're going to try to do is minimize that net profit so you can minimize your taxes, right?
Yep.
As a business broker, we kind of have to view it in the opposite way, where we want to raise that net profit number so we can maximize the multiple to value the business at a higher dollar rate. So that's what we do. We do a financial recast is what we call it, and that's where we take those deductions and we add them back in and see how much we can boost that net revenue number to show a potential buyer what you're actually gonna have, the ability you're gonna have to make with purchasing that business.
That's great. Yeah. And so we see that pretty often as kind of like you were saying that from the tax strategy standpoint, it makes sense. We want to show the least number as possible. We're going to
Right,
sell the business that
right,
the person buying the business wants to see the highest number possible. No, that
exactly.
totally makes sense. What
Yeah,
about like confidentiality and that sort of stuff? I'm sure one of the main things that comes up of somebody wants to sell the business is like, do they want the employees to find out or the competitors or, all that kind of
right.
stuff? How does that, what does that look like?
Yeah, so confidentiality is a really, really important thing to consider when you're selling your business. I sometimes I go on Facebook Marketplace or Craigslist or whatever. There's businesses listed, and those are usually for sale by owner. They have the business, the address, pictures of it, and that can be detrimental in multiple ways because you don't want your employees to
Like
know.
a house listing almost like, hey, here's a
Yeah,
picture of the
right. Yeah,
office.
they're
Hey, here's a
advertising
picture.
everything out in the open. And I think what the risk you're running when you're doing that is if your employees find out, you run the risk of losing a couple key employees. That can affect your business, your revenue, your operations significantly. And then from the other aspect, we don't want your competitors to know that you're for sale. That can cause all kinds of things. Your vendors might start questioning, like, oh, we're not going to have this account for much longer, so let's kind of brush them off and focus on getting new ones. If your competitors know you're for sale, maybe they'll just keep an eye on that listing, maybe watch, see what happens, and then they can lowball an offer. So confidentiality is really important because we don't want anyone to know that your business is for sale. We'll do a vague teaser is what we call it. So if you have an HVAC company, let's say it's called whatever it is, gyms, HVAC and plumbing, AC, whatever. We'll do when we list the business is we'll just make it very generic and we'll be like, we have a profitable, ready to grow
Oh,
HVAC company
really?
that's
So
been
you're
established
you're
for 25 years, but
you're
we
not
don't.
advertising this business at XYZ Main Street is
No.
okay. So that makes sense.
Not at all. Not until an NDA is signed. And once an NDA is signed, that individual will receive more information into the business. They'll know what the business is, where it's located. They'll have some view into some of the financials behind it. But as a whole, we don't want to put out a listing with the information of the business on there prior to having that NDA signed.
That makes a lot of sense. So you not to back up, but you talked a minute ago about 6 to 12 months, 9 to 12 months is kind of more realistic to actually sell. In that
Yep.
process, is there a lot of, I don't want to say like fake buyers, but how do you identify like a real buyer and maybe
Right.
a tire kicker or I'm sure that
Exactly.
kind of stuff comes up,
Yeah.
right?
Yeah, so that is very, very common in our industry, right?
Really?
There's a stat out there that says something like 98% of people that look through business listings and even go a little bit further down the path never end up buying a business.
Wow.
So 2% of buyers that you talk to theoretically are the ones that are going to purchase. So one of our main jobs as a broker when we list someone's business for sale is to handle all those conversations in the background. So we'll handle all those buyer conversations. We'll vet them to make sure that number one, they're financially capable of purchasing a business.
They
They
can
have a
actually afford it,
background.
right?
Yeah, they have a background that it doesn't need to match, but they have to have some business acumen, right? We're not going to sell a $4 million HVAC business to, a new grad out of college and he goes, "Well, I'm a business major. I know what I'm doing." And our answer is going to be, "This probably isn't for you. Thank you very much. Also, how are you going to buy a $4 million business?" Um, but yeah, we'll vet them, make sure they can buy, make sure their background matches. And then once we do that, we'll handle a couple more conversations on what's your plan going forward? Do you have any operational experience running a business? And then once we find the right, or a potentially right fit, we'll take it to the business owner and then we'll create that introduction and it'll be just a kind of a Q&A session between the two. And then it's up to the seller pitches their business in a way there, and then it's kind of up to the buyer if they want to make an offer. Now we'll push them if the meeting goes really well. We'll ask them, be like, I think the next step for us would be if you're interested is to submit a letter of intent and kind of kick things off to the next level.
Nice. And that's so you kind of answered my next question there too, but that was like, so somebody selling it, they're not having to meet with all of these people, right? You're just bringing to them the qualified buyers. So you're not
Right,
signing up for all this extra time of
right.
interviews and meeting all these unqualified potential buyers, right?
Yeah, yeah. And one of the questions a lot of business owners meet or ask me when I first meet with them is, well, why don't I just list it and do it myself? And I always
For
tell
sale
them,
by owner, huh? Just
yeah,
like they
you're
try
more
to
than
sell the
welcome.
house, right?
Yeah, yeah, you're more than welcome to do so. But if you have a strong business, good financials, good earnings, you're going to have a lot of interest in that listing. And there have been cases
You're
where
going
I've
to
seen,
get flooded with
you
messages and emails
yeah,
and,
exactly.
texts
And
and
a lot
whatever.
of those are going to be dead ends. And that's why we exist is to handle those conversations and make sure that we bring you at least qualified people that are interested in doing it. You're going to have, I mean, I've seen home services businesses right now are very popular. Plumbing, HVAC, electrical,
That seems to be, yeah,
roofing.
like what you hear everyone talking about, and private equity is buying up a lot of those too. Are you seeing a lot of
Exactly.
that?
Yeah, they're doing a lot of that right now. So if you have a really strong home services business and it's got really good earnings and you list that business, I've seen an HVAC company be listed for 2 weeks and have almost 400 NDAs signed. So as
Wow.
a business owner, we want you to focus running your business like you always have. We don't want you to step away, kind of say like, don't take your foot off the gas. Like you want your business to continue to perform, if not grow. And we don't want you to worry about trying to contact those 400 people that have shown interest in your business. Because if you contact the first 25, maybe your buyer's in that first 25, but maybe it's in the 375 that aren't being contacted.
You never know, right? Yeah. And the last thing, as a business owner, I could say the last thing I want to do is answer, 400 emails or inquiries about anything where people aren't serious about getting it done. I've got to
Right,
go run the business and do the day-to-day stuff there too. So
right. Exactly.
interesting. So you said NDA. What does that stand for?
Non-disclosure agreement. And we always ask everyone before they get any confidential information to sign one. Uh, it protects the seller primarily, and it also protects us for our company as well. We don't want, because most of the sims, like essentially the pitch decks for these businesses, once they're signed the NDA and they get that information, it usually contains about 3 years of financials. So I mean, there's some information in there you don't want people to go off and just, rattle off the mouth that, oh, you know what, Jose's taco stand made $4 million in revenue last year and they profited 400,000. Like that's crazy, right? You don't want anyone to go out there and just kind of be spreading information about you to anyone, potentially competitors, or, if your employees find out, or pretty much anybody that hasn't signed that NDA. We don't want them to know this stuff.
Protects you for with that information. That's great.
Exactly.
And so, not to back up, but to kind of recap, so we need to plan ahead, right? This doesn't happen next. This doesn't. If I'm having trouble making payroll for the next 2 weeks. This isn't going to happen by the next payroll cycle, right? So
Yeah.
not
Yep.
necessarily something like that. We got to plan ahead, thinking about a year. We need to be organized. We're going to get a ton of inquiries, it sounds like. We
Yeah.
make sure they're not out telling everybody what's going on. Once you get people that
Yeah.
are actually serious, what's the next step from there?
Once they're serious and we've had a couple conversations, we will want, do you mean from the buyer perspective or from the seller's perspective?
Yeah, well, I guess maybe both. So when somebody said, I guess the buyer perspective. So somebody says, "Hey, I'm really serious. At this point, I want to buy it. What is the next step there?"
Yeah.
Because you're
Yeah,
gonna have all these
exactly.
people. I don't say they're not serious, but tire kickers looking around, that sort of thing. Now you got somebody raises their
Sure.
hand, says, "I looked at the financials. I signed the NDA. I want to move
Right.
further. What is the next
Right.
step there?"
Right. The next step would be the letter of intent. Now, this is not a legally binding document. This is just a blueprint on how the purchase of the business would go down. So, as the buyer that wants to buy that business, I would submit a letter of intent. It would say what I plan to pay for the business, how I would want the deal structure to go down, whether it's I have 100% cash, I'll give you all of that now, or SBA financing is going to be involved. I'll put 30% down. We'll SBA finance the rest. And it can get convoluted. There can be earnouts and all kinds of different things. But it's the blueprint of how the business is going to be bought. So once we do that, the buyer submits that. The seller looks it over. They can redline, counter with whatever they want. You reach an agreement, be like, okay, this looks good. I'll agree to that. I'll agree to that too. Now, this is when the due diligence phase kicks off.
Okay.
And due diligence is really the most important part of the whole process when buying or selling a business. This is where things fall apart.
Let's
Um,
Nick, not to interrupt you, but this sounds like you're getting into something good. We did have a question come up. I want to ask you before you dive into that,
yeah,
if that's okay.
yeah, let's do it.
So somebody asked, what's the number one tip for business owners building their business to sell? And then go there, and then there's a follow up too. So, what's the number one tip
Sure.
for business owners building their business to sell it?
Yeah, I'll give you two. Number one, clean books. It's
Oh,
not, it's not
you're making me
yeah,
so happy. I
yeah.
love that. Yeah.
It's the cleaner the finances, the easier it is to go through them and see how the business is performing, the better for both sides. It's gonna give confidence in the buyer that they're buying a good business, and it's going to streamline the process. So in that due diligence phase, that's when they peel back the onion layers. They get to ask all the financial questions they want. They can request documents, et cetera, et cetera. So clean books, very, very, very important. And the second thing I would say
What
is,
if I could, not to interrupt you, but I
yeah,
have to jump in on here too. So and we love all of our clients. I'm not picking on anybody. Like, we're in the trust tree here, right? Of course, but what we see from time to time, quite often with business owners, is, well, you got to let me explain it to them. And as a business owner, you think, "Oh, I can explain this, or the reason
right,
that happened is X or whatever." When
100%.
when the buyers come in, they don't want to hear no stories. They don't want any interpretation. They want to see the financial statements, and that's
Exactly.
100% what they go by. So I'm so glad you said that
Yeah.
right there. So go ahead on your number
And
two.
tip number two, I would say, is try and remove yourself as the business owner as much as possible. And I know this can be really challenging for people for a multitude of reasons, whether they haven't been in business that long or, they're not good at delegating, whatever it is. But I would suggest get processes in place and delegate out as much work as you can so that a buyer comes in and let's say that you've been running a business for 10 years, it's doing really well. You're now able to step away. Let's say you're not there day to day, 40-hour a week kind of person, or realistically more than 40. But let's say you've got it, you have a management team in place or a couple different departments. You're able to step away and know that your business is going to continue to run without you. That's a very important piece. When a buyer sees that, they know that they're buying an established asset and they can treat it as an asset instead of buying themselves a job.
That's great.
So I would say that would be tip number two to really focus on.
I love that. And then so the follow up to that is, when will I know that I am ready to begin the process, or if it is too soon?
Um, I don't think it's ever too soon to at least have a conversation. We've had people that have, started a business and tried to sell it within that same year, and it's been successful. They've sold it. We have other people that have gone into a business, run it for 2 years, turn around, and they sell it. So it really just depends on what you want to get out of the deal. If it's a young business and you're just, a lot of quick sales tend to be distressed businesses.
Mm.
And that is the shorter sale times. Those are usually the cash deals, smaller sale price. But I don't think it's ever too early to have the conversation. And then that way, as a broker, I could know where the business stands, kind of what the numbers are doing, what your involvement would be, and what you want out in the end of this process, right? There's kind of three main things that people want when they're looking to sell their business. Number one, they want to maximize their exit, right? They want to make as much money as they can.
Oh yeah.
Uh, a second thing I hear a lot when talking to business owners is, well, I want to take care of my employees. I've been running this business as a family business for 40 years. I'm really concerned about my people being taken care of. So that's another one, right? And then a third one is legacy. They don't want the new owner to come in, change the name of the business,
Change everything.
turn around, flip it. They're really concerned about, let's say it's, maybe they put their family name on the business. They want that to stay and remain established, especially if it's a long-standing business. So I think those are kind of the three main goals of someone that's looking to sell their business.
No, that's incredible. Hopefully that answers that question right there. Just a reminder too, because I saw we had a couple more people pop in. If you do have questions, pop them in the Q&A box. We'll make sure we answer those. If not, I'm kind of using this as like a free consultation time with Nick here and asking all kinds of stuff. I got another one, which to me is really interesting, but like, what would
Yeah.
you say the number one reason deals don't work or they fall apart or they go south, you know?
Um, Messy finances and withholding information from the potential buyer. Um,
Secrets, huh?
Yeah, and sometimes it can just be a case of, oh my God, I forgot about this one expense we had 2 years ago. Maybe it was like a legal fee that they had to, maybe a lawsuit they had, and they had a big legal fee, whatever. Not disclosing that or any issues up front and trying to hide things, kick them under the rug, and just being like, well, hopefully they won't ask or hopefully they don't find out. I'm going to tell you they're probably going to find out, and it's going to blow up the deal in the 11th hour. And you're going to have done all this work. You're going to have all these meetings. You're going to be wasting a ton of time just because you weren't upfront with some issues in the very beginning. So I've always found that just kind of being honest with any buyer and telling them about, we kind of call it like the ugly baby, right? Just tell them what the problems are. That way they know and they don't have to either try and discover them during due diligence, or even worse, is they pull their offer because you didn't disclose something and they figure something else out. And they're just like, you know what, we're going to walk away from this because you didn't tell us. I feel like we should have. Good luck finding another buyer. Um, and then, if the business does close and then they find several issues that they uncover post close, that's never going to leave a good taste in their mouth. And they might end up hopefully not running the business into the ground or destroying the legacy or, firing all the employees, whatever it might be.
Yeah, probably maybe end up in a lawsuit or something crazy. Nobody wants that to happen,
Could
right?
be, could be. Yeah.
Wow. So it sounds like a very detailed process, which is awesome. It takes a little bit of time. Be upfront, have clean books. I love the fact that you said that.
100%. Yeah.
Once everyone agrees on everything, like what does actually crossing the finish line look like, you know?
Yeah. So once everything's agreed upon and we're through due diligence, this is really the easiest phase of everything. And it's the most fun because the seller they get paid for selling their business, right? And as a broker, that's where we take our little slice of the pie as well. So we're really focused on trying to get people to that closing line. But as far as it is, it's just we hire a closing company. They do all the legal documentation. They handle the escrow. They handle all of the money transactions. And it's as simple as just a DocuSign, a couple different DocuSign documents, and then the money transfers, wire transfers, and it can be done within a couple hours on, certain day of the week. There's always a transition period between the new buyer and the seller. So and it can vary depending on the business. Sometimes it can be as little as 2 weeks to train up the new business owner, or it can even be extended out to a year or more. We've seen it sometimes on larger businesses or manufacturing or something like that, where the old owner will stay on as a consultant for a year, 2 years. Typically, the transition period is not like a paid consultancy for the seller. That's just an agreed upon. I'm going to help you out for a month since you bought the
Okay.
business. I'm going to train you up with everything I know. And then most owners show, in some goodwill, they're like, I'm available on the phone. You can contact me. We're not going to set a clock on this after. If you have questions, call, right? I'm happy to help. And then the in the certain cases where they stay on much longer, where it's a year, 2 years, at some point, maybe they get 6 months of their uh, transition period as that goodwill grace period. And then it's like, okay, after 6 months, maybe we'll keep you on another 6 months as a consultant and we'll pay you for that. So that's all negotiated prior to closing, of course, between the buyer and the seller.
That's great. And we're getting close to time here. I love talking about this stuff. I could talk about it I could talk about this for hours, but just a reminder, if anybody has got any questions, pop them in that Q&A box. We'll make sure we answer it. I got a couple more questions before we wrap up, but how do people get a hold of you, Nick? What's the best way to reach out? Is that a phone or an email or?
Email, yeah. Email me is the easiest. I'll get back, and of course, you can always give me a call. I don't know if I should put my info in the chat or just send it out after, but I'm happy to do that.
Yep. If you want to pop it in the chat, that would be good. Make sure you click that everyone box so it goes over there. We'll make sure I would put your email, your phone number, and your website. We'll make sure we send that out to
Yeah.
everyone too. So if you want to do that real quick, we'll make sure everyone has your contact information. If you're tuning in, you probably already have my contact information, but I'll put it in there too. You can always go to our website, which is actionaccountingusa.com. Just to kind of recap before we finish things up here, we talked a little bit about past, present, future. So in the past, which was 2025, not too long ago, but right, just last year, there was a major change to the tax code with the whole One Big Beautiful Bill Act. So reaching out, being proactive, getting ahead of this stuff, understanding it now is the key to that and saving money. Present, we're in it. We're in tax season 2026 right now. So start getting all those documents together. And then moving forward, if you are a business owner, you want to sell it, reach out to Nick at nicholas.bow@iconic.co. His phone number is 828-768-6241. A couple more questions. If anybody else has questions, pop them in there. If not, I'll continue to get all of my questions answered here too. But what do you see the most, Nick? Are people when they sell, is it like they get a huge check for all of the money and then they kind of just walk away? Or are these payments over years? What does that usually look like?
Most of the deals we do, they get the majority of the payment on the day of closing.
Okay.
Um, a lot of the times there is seller financing involved, or we always suggest to our sellers, like, it's a good idea in the eyes of a buyer or even the bank if that potential buyer needs an SBA loan or conventional financing, whatever it's going to be. If the seller is willing to carry a little bit of that risk in the form of seller financing, even if it's 5%, 10%, 5 grand, 10 grand, whatever, that shows confidence in your business. So that's a really good little, key show of good faith, even if it's small.
Hmm.
Um, there is inherent risk of doing seller financing, and the more seller financing you do, the higher the risk. We typically don't see like a default on any of that seller financing, but I will say it does happen. I mean, there have been cases where I've seen a business be financed 100% through seller financing. And those are always, up to the seller. The thing I do like about seller financing is the seller can become the bank. So you can set the terms, you can set the interest rate, the amount, the length of time, all of that. So if you have, let's say you're selling your business for $1 million and you want $750,000 up front, but you're willing to seller finance 25%, you get paid out over, let's say you want to get it over 3 years. So you get that 250,000 over 3 years. at whatever interest rate you set. Which recently is still a good idea, but rewind a year, it was even a better idea. SBA was somewhere between 10 and 11% on
Which is
interest.
high.
So it's
Yeah.
like you can set it for 8 and 9 and make 9% interest on 250 grand over 3 years, make a little bit more money, but you
Yeah.
still are carrying that risk of 250,000. Now, there are things in place where if they default on that, you get the business back and you can go and resell it, whatever. But I always encourage my sellers to think about doing some form of seller financing just as a
Really?
show of confidence within your business, and
Okay.
then kind of set it up to be like, well, you can make a little bit more on the back end if you think about doing this. Smaller deals, I typically don't have people do that. I did sell a brewery this year for about 75,000, and they did about 30,000 in seller financing over 3 years,
Wow.
uh, which was the suggestion of the buyer. And when we originally had conversations, the seller wasn't interested in doing more than like five to $10,000 at the most. But they saw this, they got the offer, and the guy was like, you know what, we're kind of in this time crunch with our lease, and he was burnt out. And he was like, we'll take it. I think they got what, like 35,000 up front, and then they did five in escrow, then 35. So they financed 35,000 and got the remainder of it at closing. So
Nice.
it ended up being a good thing. But yeah, I always tell people to think about doing seller financing.
That's great. Yeah, being open-minded. It's being organized and being open-minded sounds like kind of the key to this whole process.
Yeah, yeah. And I would say one more tip I would have for business owners if they're looking at, going down the path of selling their business is please do a little bit of research in understanding how to value your business. There's a lot of things that we read in the news that aren't realistic situations in the everyday world. You're going to read about your tech companies that, had a bunch of venture capital funding and then they exit for 100x. That doesn't happen in the small business world, right? And even the 10x, I talk to a lot of owners that think that, they have, because they've worked hard and it's an emotional thing. If you do X amount of revenue and you make X amount of money, that's going to transfer directly to a certain multiple. And most likely it's going to fall between a 2 and a 4, depending on the business,
Hmm.
the industry, the history. And I have a lot of conversations where they'll tell me, "Oh, my business is worth $2 million," and I'll have to ask them, "Well, how did you get to that number?" And they'll just tell me, "That's just what I think." And I have to go back and explain to them after looking at their finances and their earnings, your business isn't worth $2 million. It's worth 700,000. And that's where it's going to sell in the market. And we'll provide them comps. We'll show them current listings with similar, revenue, EBITDA, SDE, whatever. So that would be one more suggestion I would have is do a little bit of research in the true value of your business. Now, I'm
Right.
happy as well. It's a service that we provide, and we always will, but it's a good idea to have a ballpark figure somewhere in
Understand.
the neighborhood, right?
Have a good understanding. And so, just to like kind of piggyback on that, I can only imagine having a conversation with somebody who thinks, "Oh, I'm going to get $2 million on Wednesday when it sells in a month." But oh
Right.
no, sorry, it's actually much lower. It's like 700,000, and the way that's going to happen is half up front. So now you're only getting 350,000, and then they're willing to pay the rest over 2 or 3 years or whatever. So having a good
Yeah.
understanding of that prior would help you set better expectations with yourself. Love it.
Yeah, absolutely.
Well, this has been great, Nick. I can't thank you enough. I could talk about this stuff all day long, but we're running out of time here. If anybody's got any last minute questions, pop them in there. We'll answer those. If not, we'll cut this thing short and give everyone a minute or two back in their day. Last question, and then I'll let you go. So if somebody wants to sell in 26, when should they reach out to you, Nick?
As soon as possible to start the conversation. That way we know what timeline you're looking at, what we need to get done, and if it comes in 6 months from now, at least we have that baseline and that starting point to go from. Because
Awesome.
sometimes it can take a couple months to get all the numbers, all the finances, and the listing it could take 2 to 3 months from our initial conversation to day one of the business being listed.
Sooner the better. The more
Yeah,
organized you are and the better understanding of what you have is going to happen, the better for everyone.
100%.
Awesome. On my end, it's be proactive, not reactive. Appreciate you guys tuning in, spending some time with us. Look forward to an amazing tax season. We're going to let everyone go. So if there's no other questions, we'll cut this thing off. Nick, thank you so much. Once
Thank you.
again, I'm Jake from Action Accounting. We'll talk to everyone soon.
All right. Bye, everyone.
See ya.